Stocks, crypto, real estate, and more. A beginner's guide to investing and trading. Investing and trading are powerful tools to grow wealth. But understanding them is essential before putting your money at risk. Let's explore the main areas: stocks, cryptocurrency, real estate, forex, commodities, and how to manage risk. First up, stocks. What are stocks? Simply put, stocks represent ownership in a company. When you buy a stock, you're buying a small piece of that company. Why invest in stocks? Stocks offer the potential for high returns over the long term. Historically, the stock market has outperformed other asset classes like bonds or real estate. How do stocks work? Companies issue stocks to raise money for growth. When you buy a stock, you're lending money to that company. In exchange, they promise to pay you a portion of their profits as dividends. You also own a small part of the company. As the company grows and becomes more valuable, your stock's value increases. Imagine you buy one share of Apple stock for $100. Over time, Apple grows, becomes more profitable, and its stock price appreciates. Now your share is worth $200. That's a 100% return on your investment. That's a pretty good return. But keep in mind, stocks aren't risk-free. Their prices go up and down based on many factors. This rise and fall in prices is known as volatility. Some stocks are more volatile than others, meaning their prices change more rapidly. High volatility means big potential gains, but also substantial losses. If you bought one share of Tesla stock at $1,000 and it dropped to $500, your investment would be cut in half. So why invest in stocks then? Well, the key is to look beyond short-term fluctuations and focus on the long term. By investing in strong companies with solid fundamentals, you position yourself to benefit when the company thrives. For example, if you had invested in Amazon stock in the late 1990s, you would have reaped huge rewards as the company exploded in popularity. Long-term investors often focus on companies with consistent performance, strong balance sheets, and competitive advantages. Research shows that a well-diversified portfolio of index funds has historically generated strong returns with relatively low risk. Index funds track a specific market index, allowing you to invest in a wide range of companies with a single investment. So before diving into stocks, educate yourself on financial statements, investment strategies, and risk management. Understand a company's revenue, expenses, and profitability by reviewing their balance sheet, income statement, and cash flow statement. Learn about various investment strategies like value investing or growth investing to find stocks that align with your goals. Diversify your portfolio to reduce risk and consider consulting a financial advisor for personalized guidance. Next, let's talk about cryptocurrency. What is cryptocurrency? Cryptocurrency is a digital or virtual currency that uses cryptography for security. It's decentralized, meaning it's not controlled by any government, bank, or institution. Why invest in cryptocurrency? Crypto offers potentially high returns. Since its inception, Bitcoin, the first and most well-known cryptocurrency, has seen significant price appreciation. While risky, some investors see crypto as a hedge against inflation and market volatility. How does cryptocurrency work? Cryptocurrencies run on blockchain technology. A blockchain is a distributed ledger that records transactions across multiple computers. This makes it nearly impossible to counterfeit or double-spend crypto. Transactions are verified and added to the blockchain through a process called mining, where powerful computers solve complex equations. Each block of verified transactions is linked to the previous one, forming a chain. The most popular cryptocurrencies include Bitcoin, Ethereum, and Litecoin. Bitcoin, often referred to as digital gold, is the largest and most valuable cryptocurrency. Ethereum, the second largest, is a platform for decentralized applications and smart contracts. Smart contracts are self-executing agreements written in code. They automate complex transactions, making them more efficient and transparent. Thousands of altcoins or alternative coins have emerged, each with unique features and purposes. So, how do you invest in cryptocurrency? First, choose a reputable exchange platform to buy it, sell, and store your crypto securely. Consider using a hardware wallet to safeguard your digital assets. Before investing, research thoroughly as the cryptocurrency market is highly volatile and unregulated. Only invest what you can afford to lose and be prepared for potential price swings. Stay updated on industry news and technological advancements that may impact your investments. Many exchanges also offer educational resources to help you navigate the world of cryptocurrency. Real estate investing. What is real estate investing? Real estate investing involves purchasing properties such as residential homes, commercial spaces, or land to generate rental income or appreciate in value over time. Why invest in real estate? Real estate can provide a steady stream of passive income through rental payments. It can also appreciate in value, building wealth over time. Additionally, real estate offers tax benefits and can hedge against inflation. How does real estate investing work? There are two primary ways to invest in real estate: by becoming a landlord or through rights. As a landlord, you buy a property and rent it out to tenants, collecting rental income that covers mortgage payments, maintenance costs, and provides you with a profit. You can manage the property yourself or hire a property manager. Alternatively, you can invest in rights, which are publicly traded companies that own and manage income-producing real estate. REITs allow you to own a small piece of a larger real estate portfolio without directly owning or managing properties. REITs must distribute at least 90% of their taxable income to shareholders, making them attractive for passive income. To invest in real estate, start by assessing your financial situation and determining your budget. Research different neighborhoods and property types to find the best investment opportunities. Consider the potential rental income, property values, and local market conditions. Network with other investors, real estate agents, and property managers to gain insights and build your real estate portfolio. Whether you choose to invest in rental properties or rights, it's crucial to conduct thorough due diligence. Analyze financial statements and consult with professionals to make informed investment decisions. Let's move on to Forex trading. What is Forex trading? Forex trading, short for foreign exchange trading, is the practice of buying and selling currencies with the aim of making a profit from fluctuations in exchange rates. Why trade Forex? Forex trading offers the potential for high profits due to high leverage, allowing traders to control large sums of money with a small investment. It's a 24/5 market providing flexibility and opportunities for traders worldwide. However, it is important to note that Forex trading carries a significant level of risk and many traders lose money. How does Forex trading work? Currencies are traded in pairs, such as Euro USD or GBP, JPY. Traders attempt to predict how the value of one currency will change relative to another. They can go long, buying a currency pair and hoping its value will increase, or go short, selling a currency pair and hoping its value will decrease. Traders use technical analysis and indicators to identify potential trading opportunities. Leverage allows traders to open positions larger than their account balance, amplifying both potential profits and losses. It's crucial to use leverage responsibly, as excessive leverage can quickly lead to substantial losses. Now let's discuss commodities. What are commodities? Commodities are basic raw materials or primary agricultural products that are bought and sold. Examples include gold, oil, wheat, coffee, sugar, and cotton. Why invest in commodities? Commodities can offer diversification to a portfolio, potentially reducing overall risk. They can also serve as a hedge against inflation, as commodity prices often rise when inflation increases. Different commodities have different price drivers. Oil, for instance, is influenced by global energy demand and production levels. Agricultural commodities are affected by weather patterns, global supply and demand. Precious metals like gold tend to perform well during economic uncertainty. To invest in commodities, you can buy shares in commodity-based ETFs or invest in futures contracts. ETFs provide a way to indirectly invest in a range of commodities, while futures contracts offer more direct exposure but come with higher risk. Finally, let's talk about risk management and diversification. Why are they important? Never put all your eggs in one basket. Diversification is key to managing risk. By spreading your investments across different asset classes, industries, and geographical regions, you reduce the impact of any single investment performing poorly. How can you manage risks? Educate yourself about different asset classes, understand their historical performance and volatility, and assess your risk tolerance. Create a well-balanced portfolio that aligns with your financial goals and risk appetite. Regularly review and rebalance your portfolio to maintain the desired asset allocation. Consider using dollar-cost averaging, which involves investing a fixed amount of money at regular intervals to mitigate the risk of investing a lump sum all at once. And stay informed about market conditions and economic events that could affect your investments. And there you have it, a beginner's guide to investing and trading. Remember, whether you invest or trade, patience, research, and discipline are your greatest allies. Start small. Diversify and continue learning. Investing is a marathon, not a sprint. And if you want to grow your wealth safely and smartly, subscribe and stay tuned for more investing and trading tips.